So you just finished filing your taxes. And, oh boy, you owe money. That feeling, right? It can really make your stomach drop. But hey, before you panic, stick with me. In this explainer, we're going to break down exactly what to do, step by step. Yeah, seeing that balance owing message can be super stressful. There are no two ways about it. But don't worry, it's a really common situation, and we're going to walk through exactly how to handle it calmly and correctly. All right, so here's the game plan to get this sorted. First, we'll cover what a balance owing even is. Then we'll talk about the most important deadline you need to know. After that, we'll explore all your payment options, cover what to do if you can't pay it all at once, and finally, how to make sure your payment went through and how to avoid scams. Let's start with the basics.
Okay, first things first, let's get on the same page. What does balance owing actually mean?
So what it really boils down to is this. Over the course of the year, you just didn't pay enough tax to cover everything you owe. And this can happen for all sorts of reasons, you know? Maybe your employer didn't deduct quite enough from your paychecks, or maybe you had income from a side hustle.
It's actually a pretty simple formula when you break it down. The CRA just takes your total tax payable for the year and then subtracts all the tax credits you're able to claim. If you're left with a positive number, well, that's your balance owing.
Okay, so we've got the what figured out. Now let's talk about the when. And this brings us to what is probably the single most critical date in this whole process.
This is the date, April 30th. Seriously, circle it on your calendar, set a phone reminder, whatever you need to do. This is the absolute deadline to pay your balance in full if you want to avoid interest charges from the CRA.
So to put that date in context for you, the tax year ends on December 31st. You get until April 30th to both file your return and pay up. Because on the very next day, May 1st, the CRA starts tacking on compound interest. And they do it daily. That's where things can really start to snowball, which is why hitting that deadline is so key.
And this is probably one of the most important things to remember in this whole situation. Even if you don't have the cash to pay right now, always file your tax return by that April 30th deadline. Why? Because there's a whole separate penalty just for filing late, and trust me, it can be a big one. You can sort out the payment later.
All right, so you know the amount, you know the deadline. The big question now is, how do you actually pay it? Let's check out the different ways you can get it done.
Look, paying online is, without a doubt, the quickest and easiest way to get this done. You can use your regular online banking, the CRA's own My Payment service, or even a third-party provider. And the best part? You get that instant confirmation number. That's your proof, your peace of mind, right there.
Honestly, paying through your bank's website is no different than paying your phone bill. You just add the CRA as a new payee. The one key thing you got to remember is that your account number for the CRA, that's your 9-digit social insurance number. Your SIN. Simple as that.
Now, if you're not a fan of online banking, no worries. You can go old school and pay in person at your bank or mail in a check. For both, you'll probably need what's called a remittance voucher from the CRA. And if you're mailing a check, make sure it's payable to the Receiver General for Canada. And please, 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 write your SIN in the memo field so they know it's from you.
Okay, here's a quick but super important heads up that could save you a whole lot of time and frustration. You can't just walk into a CRA office to pay your bill. They don't have counter service for payments, so definitely stick to one of the official methods we've been talking about.
All right, let's tackle the elephant in the room. What happens if you look at that number and your heart just drops because you think, there is no way I can pay this all by April 30th? First, take a deep breath. It's going to be okay. You've got options.
Here's the thing you have to understand. The CRA isn't out to get you. They would way rather work out a plan with you than have you just ignore the problem. They actually have flexible payment arrangements to help you pay off your tax debt in a way that works for your budget.
And setting it up is actually pretty straightforward. First step is to take a realistic look at your budget and figure out what you can actually afford to pay each month. Then you contact the CRA, either by phone or online, to get the ball rolling. Once you agree on a schedule, the most important part is just sticking to it. Just keep in mind, right, that interest does keep adding up on whatever you still owe until it's all paid off.
All right, we are in the home stretch now. You sent your payment or you've got a plan in place. There are just two last but very important things to cover: making sure the payment was received and keeping yourself safe from scams.
So, a little bit of patience is key here. It can take a few days for payments to get processed. You'll want to give it at least 3 business days for online payments and maybe up to 10 for a check. But honestly, the absolute fastest way to know for sure? Log into your CRI My account online. That info is updated pretty much in real time.
Okay, this is huge. Let's talk scams, because you have to know how to tell a real CRA agent from a crook. A legit CRA employee might call you to talk about a payment plan, but what they will never do is get aggressive or threatening, and they will never ever demand immediate payment using some weird untraceable method.
Let me say this as clearly as I possibly can. If anyone calls you up claiming to be from the CRA and asks for payment in Bitcoin, gift cards, or prepaid credit cards, it is a scam, 100% of the time. Hang up the phone. The CRA simply does not accept these forms of payment, period.
And that's pretty much the rundown. You've figured out how to handle your tax bill. So now that this is all sorted, it's a good time to ask yourself, what's the plan for next year to avoid this whole situation? Maybe it's as simple as asking your employer to take a little extra tax off each paycheck, or setting aside some cash if you're self-employed. Taking those small steps now can make a huge difference come next April.